Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day. All is going well. Welcome to our show. We call it the Closing Beat. We are financial advisors here at Jazz Wealth. I'd just like to show you the work that we do. So we go over everything. We share this class, of course, with our customers as well as those of you that want to participate. But we'd just like you to know that we're not just sitting around in leather wingback chairs talking about the markets and money and things like that. We're actually doing work, and so we like to share what we have on a daily basis and try to teach you something. So stick around. Got probably a lot more to teach you today than I have to share with you. So I hope you'll learn something. If I do teach you something, maybe you'll hit the subscribe button, thumbs up button, or more importantly, check us out at jazzwealth.com. I do appreciate that. The SEC fiduciary teaching financial advisor. I believe we're one of the only of our kinds. All right, let's take a look at the stock market today. All in the green today. So we got another gain across the board there. It was kind of an interesting day because I don't have to say that tech was the reason why we moved higher today. If we go over to the charts, you can take a look at the S&P 500 today, grinding higher ever so slowly. Very small day, just about 1/3% on the day. We take a look at the Dow. You got a little bit of a gain off the 200-day moving average, and the biggest contributors today were names like McDonald's, up 2.5%. Also nice technical pattern off its 200-day moving average. Looking good there. That was the biggest contributor, by the way. Boeing, a little bit of a recovery after that sell-off. Last 2 days, it's recovered quite nicely. They're up about 2% on the day. And ExxonMobil, these rank as second and third place for the biggest contributors in terms of the Dow and the gains there. ExxonMobil we'll cover in a minute because of energy overall. And the Dow, our class actually Thursday for customers is going to be on the Apple 4-for-1 split, how it affects your investments here, how it affects the Dow, and I'm going to give you a few little geeky tricks and stuff so you can seem kind of impressive in front of your friends, or just teach you how it works so you can come kind of learn a little bit about the Dow and how all of that works in regards to a 4-for-1 split with Apple. So we're going to get a little geeky on Thursday evening. All right, taking a look at the Nasdaq there. You got new highs today. That's 5 days higher for the Nasdaq. Microsoft was one of the bigger drags on the Nasdaq today. It did finish down only 1.5%, was lower earlier on the day. Facebook as well, down about 1% on the day. These two names more than offset the gains that you saw in AMD, right? Just took off today, had a great day, but unfortunately all of those gains, as far as weighting on the Nasdaq is concerned, were erased because of Microsoft and Facebook overall. Looking at the S&P, like we mentioned a minute ago, not a bad day, just not an outperforming day. Continues to grind higher ever so slowly the first 5 days of August. We covered in our research section there. Tends to be a little bit choppy and maybe not the fastest, most explosive moves you've ever seen. So a little bit of a history lesson there. Also, you got some interesting things coming up here. Let's talk about this. How do you tell foreclosures, right? Everybody's out there going, are there going to be a lot of foreclosures now that that moratorium has been lifted or has expired, at least for now? And so, well, we don't know, right? Because foreclosure data that we report, you notice how I haven't shared it with you, because it's been zero. You're not allowed to foreclose on somebody, so those numbers don't exist. And so investors, Wall Street, whatever, the analysts out there, they have to go to the next best thing, which is delinquencies, which is currently being tracked. In fact, Black Knight just came out with the most recent data on that. I'm going to share it here with you. You've got the delinquency rate pulled back a little bit, right, during the virus there last month, in May actually, spiked up to over 8%. It's pulled back just a little bit overall. You could see this is a record number. Go back to 2011. So last time you're going to find a number this high. Not good times for those that are delinquent on their mortgages, not making payments, not in forbearance, not anything like that. They're just delinquent. So it's not a good number. So Wall Street has to look at this number to try to get a gauge or a feel for how much is going to be delinquent. Now you kind of understand why the banks have set aside so much money for loan losses. What's really scary based on the data, you could read through the whole thing if you want, but what's really scary is those that are now 90 days delinquent or more is up to almost 2 million households. What you're seeing on the charts here, we'll start here at the bottom. 30-day delinquents, they've moved lower. 60-day delinquents, they've moved lower. The sad thing is 90-day delinquents have moved higher. So the data suggests that those people did not start making payments. They've simply become more delinquent. And so kind of a big red warning sign overall. Because of that, you saw some of the mortgage companies and things like that a little bit weak today. As you'll see, see in our sector breakdown, financials were the weakest overall, sort of responding to this data in general. So maybe something you want to check out. I'll just share the data with you so you have something to look at there. Foreclosures will be coming back online in the next report, which is actually a month from now. So we'll start covering that because that's going to be a hot topic, really, if you're paying attention there. All right, coming up, we're going to give you some, we're going to add on to our election, our August stats, but we're going to do it by terms of talking about the election, the odds of a particular month being positive through election years. So I'll cover that in a second. But first, I hope you'll check out our FinTips videos, bottom right-hand corner of your page. This week we did how did TSP life cycle funds work, why maybe you shouldn't max out your 401k. You can also see our class down there as well. This week for customers, the 4-for-1 split. And Friday there will be no video. There will be no closing beat, just so you know. Take a long weekend. Enjoy yourself there. In our research section, hope you'll join us over there. $13 a month, actually. It just helps us out grow a little bit. Here's the most recent post. This August historically slow start. We gave you all the data inside of there. As you scroll through a little bit, if you are one of our members, you can see this is a research site. We do posts and videos. The goal is to teach you and to share current relevant research there. Just hopefully you find that sort of thing interesting there. And so there you have it. Hope you'll check it out. Let's expand on that most recent post here. We're going to talk about election year. And I'm going to be bringing this up quite a bit in our shows and classes and research and everything because it's election year, right? So you know what's going on out there. If you take a look, here is in every election year, the percentage of the months in particular being positive. So we broke it down by month. This may not be all that interesting to you, but what it shows is August tends to be one of the better, possibly better positive months. About 70% of the time, August is a positive month in an election year. All the other years don't count. We're just talking about election years. The issue that you have if you're looking at this data is it doesn't get any better going forward. The odds of a positive month start to drop off aside from October, and one of the weakest months happens to be in November. As you know, that's when they do the election. So just kind of fun, a very simple way to start that conversation rather than throw a whole bunch of geeky stuff at you. We're just starting with a very simple chart here. We'll expand on it, of course, be sharing more and more with you. All right, let's take a look at the sector breakdown here for the day. We're going to go over, not there, we're going to go here. There you go. I'll start with the financials. They were the worst performing sector on the day, just by a little bit there. It's going to be those the idea of foreclosures. How bad is that going to be? Financials have been a tough place to invest anyways, so I very quiet over there. And they've all mostly reported earnings, by the way. All right, energy stocks, best performing sector on the day. Leader, broad leading sector today, broad rally in the sector, I should say. ExxonMobil, Chevron, all leading higher, everything looking good there. They were the biggest contributors overall at Williams companies. If you want to look at this one, strong break above the 200-day moving average. You had a few of these out there today where technical breakouts really were the main focus. Williams Companies, I believe, was the best performer in that sector, if you're interested. Why was it so high today? Well, one reason could be the price of oil. Oil not only gained about 1.6% on the day, trading at 41.68 is where it finished off. You've got a couple things going on. You could say that Beirut explosion, fascinating. I mean, obviously sad, but just an interesting video if you get to see that, by the way. Anyways, but you've got that going on, maybe some concerns there if it in fact was not an accident. And then you have this technical breakdown that failed and reversed. That's a failure pattern that people look at and assume that it's going to move to the upside. So you've got a technical breakdown failure, which leads you a little bit of excitement for the bulls there. And so that in addition to the Beirut thing, in addition to inventories coming out tomorrow, and people are already predicting that, you got a reason for a little bit of higher move in oil today. And the energy stocks. Real estate getting a nice little bump today, 1.5% higher on the day. This was going to be because of your tech-based REITs, right? Your storage companies, your tower companies, things like that. Not necessarily the apartments, the commercial real estate, things like that. American Tower is one of them, continues its real strong uptrend here. A little sloppy in the short term. If you're playing around, it's not that exciting to hold on to, but that's what it is right now. Crown Castle, one of the bigger weighting stocks in that sector, doing well, and Equinix hitting brand new highs in real estate, so that helps out there. We'll go over to basic materials. Great reversal day off the 20-period moving average there. Now positive year to date. Some of those reasons are going to be because of Mosaic. We'll cover that in a minute. Sherwin-Williams, there you go. Almost hitting new 52-week highs on the day. And Newmont Mining hitting but not closing at new 52-week highs. Why is that? The price of gold, man. Gold up $34, even more after hours. 2021 an ounce is where it closed out the open session. The electronic session up 50 bucks, right? So a big spike in gold, on that one. And that's because late in the day, you had the dollar reverse course, was trying to hang on. It went negative at the end of the day there. Everybody's looking at stimulus, maybe not being all that exciting, but we're still looking to get a stimulus program there. Also, yields, right? The focus is becoming on yields being negative on a real basis, right? Meaning you may get paid 0.3% to hold a 10-year, 5-year, whatever you're looking at, but after inflation, you have a loss. And so we, mentioned that, what was it? Earlier this year, we talked about that. It's a losing proposition to be investing in bonds right now, and that's becoming more of a focus. We did tech already? Tech up to highs there as well. Sleepy kind of a day, at least initially, and then you got a little bit of a run up at the end of the day. You've got Apple in the mix there. Another positive day for Apple. Here's something fun. I'll teach you something or share some data with you. If you look over the last 4 days, since this rally started. It's a great rally. It looks really cool. The market cap of Apple from here to here has gone up $300 billion. $300 billion in 4 days. That is a growth that is actually larger than the entire size of JP Morgan. It is growth that is larger than the entire size of Netflix. It is growth that is larger than the entire size of Verizon, Home Depot, right? Things like that. Just an incredible move there. So check this out. If you look at Apple's move over the last 4 days, it's $300 billion. That is actually larger than any of these companies you see on the screen, American Airlines, Mohawk, Apache, right? You know a lot of these names. But in fact, it's larger than all of these names combined. So it's bigger than every single one of these names thrown into a bucket. That's how big the move in Apple has been. In fact, there's only 10 names. I put them down here at the bottom. There you go. Only 10 names that 4-day gain in market cap did not grow bigger than the entire value of a company, right? That is just truly incredible there. The gain in Apple over the last 4 days is bigger, $300 billion, than 98%, 490 stocks. It's bigger than 490 of them. So however you want to look at it, you've got to have some respect for what Apple did. It is now more than 4 standard deviations away from the 200-day moving average, which in the short term, you can see last time that happened, didn't do a whole lot. So if Apple doesn't do a whole lot from a technical perspective, you kind of understand why. And I thought that was rather interesting. Let's go over the new highs, new lows for the day. That's not it. It is this one. Ta-da! There you go. New highs, new lows. You got 24 new highs in the mix today. Not a really exciting list, by the way. If you look at something like Charter, very strong. I like this reversal here where it was down, right? Yesterday or 2 days ago on earnings, reverse course, tried to recover some of that. Now fully recovering, showing some real momentum, strength in the short term. You've got Whirlpool. I don't get it. I don't know why this one's so strong. This one is just doing really well, outperforming the market by 12% at the moment. And when I say market, I mean S&P. Costco breaking out there, looking good. This was on our list the other day, stocks that were very close to new 52-week highs. Very strong one there. Obviously, you can't complain about Costco, doing good. General Mills, up 2% in the consumer staple space. I thought that one looked kind of interesting, a notable name. And NVIDIA, just a workhorse, man. Very, 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 very strong. All right, over to our watch list today. We're going to talk about something interesting for you here. We are looking for stocks, I should say, that are beaten down, that have shown some excitement. So the other day we were looking for strong stocks that maybe we could find a reason to buy them. Today we're looking for stocks that are beaten down, that are showing signs of life. This is a very tough place to look. You're going to notice this watch list is very not pretty, right? But there's people out there that like to buy the super discounts, hang on for a while, wait for them to wake up and see what happens. So that's what we're looking at. Let me give you an example. The first one is Apache, right? So the stock is naturally beaten down. We said it has to be down at least 25% or more on the year. That's all we're asking, right? Give us something that's really beaten down as of yesterday. And we want it to be up at least 5% in the last month. Show us some signs of life. So beaten down, maybe doing a whole lot of nothing, but in the last month, showing some kind of signs of life there. That'd be your Apache. It's going to be Viacom as well. You could see the chart there. It's not pretty. I told you it wasn't going to be pretty. Beaten down and starting to rally there. DXC, very much beaten down, but in the last couple days, right? Last couple weeks here, I should say, starting to wake up. Very little in terms of moves lower. Not a lot of bottoming tails. You had all this going on. Down and then back up. Down and then back up. Down and then back up. Look what's not happening anymore. it's a very muted move. Seems like it's waking up a little bit. I can't say whether that's a buy or not. Mosaic, I would have made the list anyways after today. And in fact, let's just skip all those and we'll go right to the list because I've got a whole list for you. Here is the list of all the stocks that are down at least 25% so far year to date. But over the last month, they've gained at least 5%. You can see them on your list there. Some of them sticking out like Cincinnati Financial, Apache, Mosaic's going to stick out as of today. It was already up 7%. Now it added another 7 or 8% today. Lowe's Corp, you can see some of those in there. They are obviously very weak stocks, right? So very susceptible to short-term weakness in the economy and the market. So beware of what you're messing with there. Also off to the right, I put the earnings date. If we have an earnings date approaching and it has not yet to have reported, I put it on there for you so you could see that you might be buying something right into earnings or you might be researching something. Whereas if you don't like buying stocks right ahead of earnings, I put that date there for you so you could take a look. So again, today's watch list is beaten down stocks, not momentum, not your, Microsoft, Tesla, all that stuff. Beaten down stocks nobody's talking about, but that are slowly starting to wake up and come up on the radar there. No guarantees of anything, of course, but there you go. Stocks in the news today. Let's go on over and take a look. You've got Microsoft as one of those on the list today. Down just a little bit, like we mentioned earlier. China says we're not going to allow we're not even going to allow the U.S. to buy TikTok. We're not even going to allow any part of it to buy that there. So, well, not good news for them, but it was good news for Snapchat. Snapchat recovered a little bit, 2.5% on the day. They're really hoping the deal doesn't go through and that they do ban TikTok naturally. If you own Snapchat, you would feel the same way. Moving on, you got Virgin Galactic down about 13% today. They reported earnings and basically as expected there, not very much to report, but they also, the number of space travelers flattened out. I think that's what everybody was focused on today. The number of people giving them money right now to potentially fly to space at some point in the future has flatlined. And that's not good because they need a lot of money to get a lot of people up into space. So that one was lower on the day. Take-Two Interactive hitting new highs, up 6% on the day. They missed on earnings, but they raised their guidance. That's what everybody's looking at. How do you feel going forward? This company was very positive going forward. So that's that one. And I think Activision, after hours, reported earnings. It's down about 1%. But yeah, they did report earnings there. Earnings missed 90 cents there. Revenues down, or revenues 1.9 billion. Earnings 90 cents. Yeah, they beat on earnings, beat on revenue, it looks like, but still down just a little bit. Not sure what's going on there. Anyways, that one's in the mix. And I'll point out Ring Central. You know who these people are. Ring Central down a little bit on the day. Overall, subscribers were up 32% overall, but and I got a few price target increases as well. I'm not sure what happened there. Deutsche Bank, Morgan Stanley, Goldman Sachs, they all, Jefferies even raised their price rating. Oppenheimer raised their price target as well. Not sure. Maybe just a little bit overdone there in the short term, but that is it for that one there. All right, couple stocks after hours here. You got Nikola. Nikola taking a beating after hours, down to 33 bucks at the moment, down 12.5%. Let's say $34 now is where it's trading. That's going to be right about there, losing all of today and a little bit of yesterday as well. On their earnings, they've got a bigger loss than expected. They don't make any money. They don't make anything. I don't know what to say. Right? They make drawings on paper. They make renditions of trucks and stuff. So I don't know what everybody's looking at. But down 12% there for Nikola, and that came out after hours. Disney had earnings as well. That stock is up 5.5%. Good. I like Disney. So Disney up 5.5%. Beat on earnings, missed on revenue, big losses to report there, but it was largely expected. They missed on every single business segment besides Disney Plus, which is their media category there. Obviously, parks were down. I think parks only brought in like 900 million, which it sounds like a lot, but all the parks, it's what they brought in? That's a tough one there for Disney. Anyways, still up 5% after hours, not as bad as everybody was expecting. And ATVI did report after hours, beat on earnings, beat on revenue, and the stock is just floundering around, plus or minus 1% at the moment. So that is that one there. We will take a look at maybe a couple earnings for tomorrow, and I'll take your questions. You got CVS, Humana, Regeneron, Teva Pharmaceuticals, Wayfair, and MetLife. That's what we got. All right, let's see what questions you have. I'll see what I can do in terms of that. Wynn missed on earnings, I believe. Big losses there. It's going to be a while for Wynn after their earnings announcement there. Big loss, yeah, $6.14 versus the $4.98 loss expected. 85 million in revenue versus 212 million. Times are tough for Wynn and well, casinos, right? So yeah, not good, not good. Tough one. What do we got here? I think the Nikola CEO is going to be on CNBC tomorrow. He'll be on one of those channels right away. Yeah. Oh, by the way, the Kodak being investigated by the SEC for that loan for the stock they gave the CEO and a couple other transactions right before they made the announcement. Yeah, that's a tough one. I'm glad I'm not part of that one. That's all I got to say. We like the SEC here. We're very nice. We try to do everything we can to stay in good graces with them. I don't need them knocking on my door. If you don't know, we're a small company, but we're registered with the SEC. We went through the whole headache and everything. So it's as if we are a Fidelity or a Schwab or something. We went through that whole process. I don't know why, but we did it. And boy, don't mess with them. Those are my buddies. Yep. How does beat on earnings mean more than... Yeah, what's the question there? Is the market obviously maybe crazy, not looking at 2019? Not sure what you're asking there, but the market's focus, at least this earnings season, is on guidance going forward. Every earnings season, there's a focus, whether it's earnings, revenue, certain metrics for an individual company or a sector. If it's retail focused, then that'll be the focus. But this earnings season was about forward guidance because the last earnings season, most companies just withdrew guidance. They didn't even say a word about what they expected because they had no idea what to expect, to be fair. So this earnings season, we're getting a look forward, and that's where all the attention's been going there. Is financials a buy? How do you buy it? I mean, what do you do? You have to be a stock picker in that category. I did a whole thing on this on one of our closing beats to say, take the financials, break them all into little categories, which little subcategory is doing the best and showing the most strength. It was the exchanges at the time. But yeah, I don't think you can buy them as a whole and feel confident about that. Especially, remember, you got the Fed coming out sometime, maybe by the end of this month, but certainly by the end of September, to talk about how they're going to force inflation higher. And that could mean lower rates, maybe negative there. I don't know. We'll see. So it's a tough one there to buy them as a whole. What do you think about China trade talks and everything? I don't think you see much out of that. I really don't. I think you see a lot of back and forth, and all that great stuff, but we're going to focus on the election. The media is not going to cover it too much. I think if that even does happen, I don't think it's going to be that much in the news there. Are these tables available in readable form on a research site? You mean, well, whatever, when I was just showing you the research site there, those, yeah, you can click on them and they'll pop up. So I think that's what you're asking. Like when we make a table, can I share it? This should work, something like this. Yeah, there you go. That's what the post looks like, by the way. This is an old post where I put the actual data. We went nuts on this one. I'm sorry. It's normally not so crazy. It's a bad one to show you. But yeah, I actually share all that there with you as well. I think that's what you're asking. Yeah. Yeah. Well, hey, if you own Disney, you're happy. I mean, presuming that I'm assuming that it does open there tomorrow, about $5 higher. Now, $5 higher puts it right at the 200-day moving average, by the way. So just a heads up there. I mean, it's not something you wake up and try to fight that right away. Notice it's had some problems. So right now, trading at 123.59. That's just pennies away from that moving average there. I would want to see what happens first. Yep. I don't know how they'll create inflation there. They're doing a year, what do they call it? Year study right now. I can't think of the name, where they're going to publish the results of that supposedly by the end of September. And the main focus is how in the heck do they get inflation higher? That's been their struggle. That's what they want to do. So whatever it takes. I don't know. I don't see helicopter money or QE as an option there. I don't think they will. Yeah, that was tough to watch there. Anytime there's something shocking around the world and we find out about it, we want to go see what's the effect, where did it happen, is that going to affect oil? We look around all that stuff, and boy, those are tough videos to watch. That was a tough one. So let's hope that was not malicious. Did you do a presentation on the meaning of moving averages? Yeah, actually in the video library, I believe we did that for customers. We went through each one of them there. I wonder, if you're one of our customers, go in the dojo, hit search moving. See how I just searched moving? This is the one there. It's been a while. Maybe we could revisit it. That was last year, but it's in there. You got it. All right, well, I'll wrap it up there. I do appreciate you guys hanging out with me here today. We'll be back tomorrow to do this all over again. Remember, no show on Friday, this Friday. And enjoy the rest of your day. If I helped you in some way or taught you something you didn't know, maybe you'll hit the subscribe button, the thumbs up button, or go to jazzwealth.com right there. All right, enjoy.